It is a truly frightening fact to contemplate the record-breaking numbers of Americans who have lost their homes due to the ever-failing economy. At first glance, without giving the matter much thought, the casual observer would simply make the erroneous conclusion that the economy is much like the weather, a force that has a mind of its own. The economy is often regarded, therefore, a phenomena that flows with the currents of the unpredictable trends of human nature, so it is considered primarily a non-controllable element of chance. Though there are attempts to create control elements within our economy, one often reaches the final conclusion that the world of finance is free to flow where it wills, much like the wind. In the Gospel of John, chapter 3 and verse 8, Jesus teaches us about the nature of the Holy Spirit, that it is like the wind. It blows wherever it pleases. You hear its sound, but you cannot tell where it comes from or where it is going. Though we recognize this as truth, we would be remiss to liken the economy to the wind. Rest assured that the economy is most certainly controlled and manipulated by the banking industry and several other globalist organizations. Therefore, the intelligent observer will soon deduce that the economy is not subservient to the whims of chance and need, but rather controlled by the evils of power and greed. We have laid the groundwork to discuss the subject at hand today, foreclosure. However, our discussion today will go far beyond the statistics and economic factors that affect foreclosure and the individuals that have been devastated by the loss of their properties. Though I will provide objective and sound advice about foreclosure, I will also divulge a dark truth concerning the financial institutions who profit from foreclosure. Aghast, you say. How does a bank profit from foreclosure? Well, pull up a chair and get ready to take some very disturbing notes. The process is really simple. Bank A must foreclose upon a property, and ultimately, after the foreclosure process is complete, the home buyer is given notice to vacate the property. Now, in most cases, Bank A will now auction the home on the front doorsteps of the courthouse. The property is sold typically to a home investor who will do some minor repairs to the home and flip it for a profit. Our perceptions are as follows. We naturally grieve for the loss of the original home buyer and understand that Bank A has walked away with their tail tucked between its legs, only to lay under a tree somewhere and to lick its wounds. Though the former is true, the latter is not. When the property is sold to a new buyer, Bank A is often chosen to finance the loan again, only for the process to begin anew. Now, this can happen over and over again until Bank A has made astronomical profits from just one piece of real estate. Bank A really never loses any money, and in the long term stands to make much more money than a standard home loan, in which the homeowner satisfies all mortgage payments until paid. Home foreclosures is most certainly a profitable business, and is one of the major players in the ruthless and lucrative business of debt. Even if Bank A does not get a chance to refinance the property if foreclosed upon, it has already made a tremendous amount of profit in interest payments. You can rest assured that Bank A gets their money first, long before you have had any opportunity to gain any equity in your home. Christian financial advisor David Ramsey discusses alternative creative methods for purchasing property in his book The Total Money Makeover, Steps to Financial Freedom, where he also outlines a baby steps approach to gain control of your finances. In addition, there are many alternative ways to save money purchasing and or building a new home. Do a Google search on alternative housing, and you will see a plethora of listings on some home kits and building plans that are simple to construct and far less costly than buying a new or pre-existing home. Indeed, this approach is not suitable for everyone. However, it is a viable and legitimate choice for many. Furthermore, mortgage companies are more likely to foreclose on homeowners than modify their loans because they make more money from the foreclosure process. When a homeowner becomes delinquent on their mortgage payments for a home that has been securitized, the servicer becomes responsible for the late payment to the investors. When a home has been foreclosed upon, the servicer is typically first in line to recoup their losses. Yet, when a mortgage is modified, the servicer will typically lose money. Now, the laws of the land should mandate that mortgage service providers should make every effort to modify a loan long before initiating foreclosure proceedings. It is this writer's conviction that the reformation of foreclosure and bankruptcy laws could permit judges to modify distressed mortgages as a countermeasure to foreclosure. Although the Obama administration has created a $75 billion program to limit foreclosures, be it known that foreclosure statistics are not being appreciably affected by this program. In fact, the Obama plan would shift the financial liability for refinanced loans from Wall Street to the American taxpayer. By focusing on lower payments, the program does not confront what housing experts view as the core problem of the foreclosure crisis: borrower debt that exceeds the value of one's home. Now, this plan, therefore, is effectively pouring gasoline upon the raging fires of inflation and indebtedness. In summary, many mortgage companies and banks are intentionally reluctant to give strapped homeowners a break because the companies collect lucrative fees on delinquent loans. Now, this act embodies an example of the darkest forms of evil and greed. In fact, this commentator contends that this practice can be considered criminal in nature. When borrowers stop paying on their home, mortgage companies that service the loans collect fees out of the proceeds when the homes are eventually sold in foreclosure sales. The longer borrowers remain delinquent, additional opportunities present themselves for these mortgage companies and banks to extract revenue from the collection of fees for appraisals, title searches, insurance, and legal representation. Inflation, debt, and the Federal Reserve have proven to be counterproductive for Americans and businesses, yet conversely, very profitable for the world of banking. Foreclosure, without question, factors into the equation of inflation and is one of the elements that globalists will employ to bring America to her knees if we as Christians fail to act against these measures. Debt arbitration services exist if you are in need of such, and many of these companies are Christian-owned. However, the first step in our strategy should be the pursuit of debt-free living, which I discuss in my YouTube video, The Ruthless Taskmasters of Debt. I implore you to resist the naysayers who say that debt-free living is not possible. This is what the dragons of conquest and power want you to believe, so you will remain under their tyrannical debt control. We conclude our discussion with some simple yet powerful advice. Avoiding foreclosure and implementing debt-free living should be considered an integral part to our spiritual warfare, with frugal spending and the elimination of all credit purchases notwithstanding. Additionally, we can consider fervent prayer, dedicated service to God, and thorough study of the Scriptures as essential elements of our survival, which cannot be overemphasized in this closing thought.